Stocks catching a bid here. Let's see what's on the table. Kevin Green joining me for a look at the flows and the charts. KG, we have some interest in stocks, perhaps the slightest of nibbles.
This looks like it's a short covering event that's taking place here, Oliver. We had pretty much a capitulation type of day, especially that last hour or so of selling, which is very aggressive to the downside, really trying to push lower here. We identify that 5,600 level as a potential area of support, or that negative gamma area when you're kind of looking at the volume flows. And we tried to stay there for about maybe 10 minutes or so, then we flushed right down. Now we did actually see some flows at the 55.75 level. We pushed through that, and then we started seeing some buyers kind of stepping in. Now, the key is going to be 56.23. I'll be very precise there for the S&P 500 to really try to recover and get above that level. There is still a short zone at that level if you're kind of looking at the overall primary trend. We have this channel line to the downside. There's another channel that you could also make, which would align with that 56.23 level. And if we can actually recover from there, then maybe we continue to see some buyers really try to step in. But I would just be very cautious, very low liquidity, short covering, a little rally that we just saw there. And then, you could actually see some shorts kind of stepping in. What I will want to call out here, the E-mini S&P 500 futures, if you're looking at the volume, so uptick versus downtick, so the volume that occurred on upticks versus downticks, it was pretty much at around 95% before that bottom, and now you're sitting at around 70%. So that actually means that there was a lot of trading that took place right there at those lows of around 55.64, which is a good thing, but once again, kind of indicates short covering. We also are getting close to that 10% correction level, 55.50 if you're looking at the E-mini S&P 500 level. And then we kind of talked about that gap on this chart, that yellow block that we have on that chart, that it would create this void. And as soon as we touched that gap to the downside is really when you started seeing accelerated selling pretty much across the board here. So we're trying to recover. Maybe we can recover that gap, but that's something I'm keeping my eye out on for the next 30 minutes going into the close here.
All right, finally got the RSI oversold, took a big puke. I think we used that word a couple times last week when anticipating the options, and they were stacking up mostly negatively. With that persistent lower highs, lower lows, breakage of support, and now further beyond that election level, we really kind of opened up a can of worms here. I think a lot of people were hoping we wouldn't do.
Yeah, what was actually different for today than what we've seen over the last couple of weeks here, Oliver, we have had these rotation trades going into defensive stocks, especially high yield dividend stocks. I've been bringing that up, and also just defensive in nature. If you're looking at consumer staples or utilities or anything that's pretty much defensive that is out there, right? Mm-hmm. But today,
we're talking Apple.
Actually had
Apple finally got killed.
But today, you actually saw dividend stocks and the defensive stocks outperforming. They were up, if you're looking at the SPY-D, Spider High Yield Dividend ETF, it was up almost about 1%, maybe even across 1% here today. But once we kind of got to that level, you started seeing that aggressive selling to the downside for the broader equity market. You started seeing traders selling out of those defensive stocks. So this was the first sell everything type of event that we've had throughout this whole downturn. It was more than just a rotation today. This was truly selling where we got to those lows. Now we're seeing a nice little bounce. SPY outperforming those dividend stocks as well. What's really catching a bounce right now? Communication services, as well as information technology. Let's see if that's going to be able to hold, and we can kind of push higher here going into the close. But once again, I would be very cautious. And if this is a capitulation type of event, you would look for a follow through of 1 or 2 days before we may have short sellers kind of getting back into the market and trying to knock this down. We are not out of the woods yet by any stretch of the imagination. Hopefully we can recover as much of the losses that we can for today.
All right. So maybe some capitulation signs, possibly like a flush, at least short term. We also talked VIX in the stair step from last week. We're seeing VIX come in as we speak here a bit after hitting 29.6. We're at 27.5. Does the vol structure look capitulatory, KG?
Not really. If you kind of look at it, the front end is still really elevated compared to what we're seeing on the back end. And in fact, the backwardation's got even worse. So there's more concern about what's happening in the near term than there is across the curve. Now, you may say that probably could be the start of vol kind of coming down a little bit lower. I would just, once again, I would express some caution there. I'm still kind of scratching my head to figure out why vol has not really ramped up in the manner that it should, given the aggressive nature of the selling off. But maybe once again, people may not want to hold, may not want to hedge. They might be utilizing zero DTE, which is going to impact the volatility index just as a whole. There could be a multitude of factors here, but the backwardation is still getting more aggressive, actually day by day. So until that actually starts to back off, I would stay once again a little bit cautious. And when we're looking at this chart, we're holding in that bottom end of that channel line. So we went right through it, touched 55.64, keeping that one intact. Once again, technically you would say follow through day for tomorrow if we can. Hopefully the news will allow us to do so.
All right. So we've got obviously a lot ahead of us here in an uphill battle. As Vincent Dillard was talking to us about at the top of the show, if that CPI print doesn't go well, that would be a really nasty additional dagger to have in our side. Okay, anything else, KG? What else you got for me? We got a minute.
Yeah, I would just say once again, be very cautious with this. And if you're trading options, risk defined is going to be very key. You're seeing a lot of burn when it comes to premiums right now because of this aggressive selling to the downside. Calls are really holding up any type of value, obviously, because we would continue to melt down. But what I'm also noticing is that the premiums on the downside of the puts themselves, Oliver, are just really, really elevated. In fact, if you actually look at an options chain, you can look at an options chain for tomorrow. This will be people's homework. Look at the options chain for tomorrow. There's bids. There's actually active markets 300 points away from where we are at right now, just for zero DTE. And that kind of tells you that this market obviously is very active, but that could also be very dangerous for those that think those premiums are going to last for that long. Usually we will see a removal of volatility, a drop in IV, even if we do have aggressive selling to the downside. Generally, we do see a topping in IV, and that could really crush those positions.
I mean, your odds of vol crush when you're at VIX 28 are very high, very high. Now, last week when we did talk about the potential for downside, we talked about how there is a kind of threshold technically, or if you break down, you can have those big moves. But now when you're nearing VIX 30, as we did intraday, this helps get you some way there towards kind of a higher level of confidence for some degree of capitulation. Whether or not that lasts more than an afternoon or a day, obviously, we have no idea.
Yeah, I agree with you. Usually those events are 2-3 day events and also kind of aligns with news items. Right now, this just seems to be,
we need some.
We have news, but this seems to be a little bit more mechanical in nature. When you're kind of looking at the price action, it symbolizes the same. When you just have an aggressive selling, stair-step approach to the downside before that major flush, kind of just tells you that there is just a massive de-risking event that is taking place. The other side of that, though, once again, I always have to say this, long-term investors, there are some value plays that are out there. There are some things that are working or that might be a little bit oversold that people may have had on their watch list. So look around. You always got to be active in this market here.
All right. Thanks, KG. Appreciate it.